you do have a lot of foreign holders of US treasuries that are reducing their holdings. One, because they're not certain that the dollar won't continue to go down. Therefore, that makes these less of a reliable investment. They're also not certain that the United States won't weaponize US treasuries in some way.
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nwaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I am joined by Noelle Acheson, who I think her reputation precedes her, has a fabulous background in both the traditional markets as well as entrepreneurship. I'm currently the author of Crypto is Macro Now. If you haven't signed up for it and taken that digest as it comes out, you should. Some very fabulous commentary as it relates to the intersection of macro and the crypto markets. Noelle, welcome to High Stakes.
Alex, so good to be here with you. And thank you so much for those kind comments.
No, absolutely. So Noelle, I figure where we could start is maybe just getting a big flyover of your background. Again, like most folks that we tend to have on the show, you have a very wide-ranging early, and sort of mid-career that, brought you into crypto eventually in sort of a very interesting way. So maybe let's start there. And then I do want to dive into as sort of the first set of questions of how you came into crypto. So maybe let's just start with the overall sort of, major stops, and then we can sort of jump into specifically what got you interested in the crypto space.
Happy to. And it is one of the most fascinating things about the crypto space, and I'm sure you see this as well, is that we tend to gravitate towards it from such diverse backgrounds, from many different walks of life and many different professions. Mine is TradFi. I started out in TradFi, worked in various roles for 10 years, corporate finance, research. I ended up doing fund management here in Spain, where I still live, and was not compatible with, having a family. I was doing futures and options at the time and found I, could barely breathe, not the healthiest of lifestyle. So I left that to set up one of the first e-commerce companies in Spain. This is back in the dinosaur years of 2000. There were 5 of us. This was back in the paper yellow pages days. I don't know if you remember those, but we had to actually even list in those. It was extraordinary. Ran that for 13 years, sold it in 2013, and then sitting in my parents' living room in London one rainy January evening, trying to figure out what to do for my third career. I was reading about what had been happening in the world in my absence, and interested in finance, interested in technology, kept hearing about this thing called Bitcoin. And I don't like not understanding something, so I watched a video on Khan Academy. Do you remember Khan Academy? And when I realized that what I was looking at was decentralized, permissionless payments, I got goosebumps because I grew up in the middle of Africa in Zambia, and just thinking what permissionless payments could do in that part of the world, I dove headfirst into the Bitcoin rabbit hole. That's in 2014, so it was only Bitcoin back then. Obviously, the more I researched, the more I realized that permissionless payments was perhaps not going to be the immediate use case. And also the more I realized that what I really was looking at was a new type of marketplace. And I am a total markets nerd. I do believe markets are a tool for freedom and opportunity, and they're less and less used in that way in the Western world. And I do hold out the hope that we will be able to see easier creation of marketplaces around the world. Anyway, once I realized that it was a new type of marketplace I was looking at, I realized that, yes, this is what I wanted to spend the rest of my professional life researching. So I did just research for a couple of years, did some teaching, and then in 2016, I joined CoinDesk to help them launch their newsletters. CoinDesk back then was the leading media source for the emerging crypto ecosystem as it was. I ended up setting up their institutional focused research team. And then in 21, I left to do the same for Genesis Trading, which, as many of your listeners may know, was at the time the leading prime broker for crypto markets. It also was one of the architects of the great collapse of 22. I left in September 22 to focus on what I really care about, Alex, which is the overlap between crypto and macro. A lot of what I had been doing at CoinDesk and at Genesis was explaining the macro influence on crypto markets. You got to watch the FOMC press conferences. You got to keep an eye on the economic data to know where liquidity is going to be coming from. That's interesting, and I still do a lot of that. But what I also very much care about is how crypto is going to influence the macro landscape, especially given what's happening out there in the world now. I do think that focus is more important than ever.
No, absolutely. And I would say, one of the conversations that we had in Spain was around institutional entry into the crypto markets. And I think there's been a consistent drumbeat of, the institutions are coming, And, many of us have been waiting sort of with bated breath as we think about, what that means, right, for both the industry and for the macro, to your point. What's the biggest shift you've noticed in how institutional investors or institutional players are approaching the space, especially, again, in today's macro environment, which, as probably most of the listeners are going to feel at this point in time, feels very volatile and out of whack. But what have you noticed as like a big shift sort of in the institutional sort of like thought process as it relates to the space?
There's still, surprisingly, even still today, a lot of skepticism, despite the ETFs, despite Larry Fink, despite even Jamie Dimon acknowledging that maybe there's something here. I still come up against a lot of skepticism. To be honest, I enjoy that because if we can't steel man the arguments in favor, then we don't really deserve the opportunity to do so, if you know what I mean. So I do enjoy speaking to skeptics, and the kind of skepticism that I'm still seeing is that what's the use for Bitcoin? What use case does it have? And if you can't figure out a use case for Bitcoin, they're not even going to try to figure out a use case for ETH, for AVA, for Uni, for all of those. And this is something, again, I grew up in the middle of Africa. So this kind of attitude is generally expressed by people who live in a very comfortable financial system and who don't have to worry about rapid depreciation, etc. We'll head off into the macro talk fairly soon and argue that that is changing now. But often nobody really wants to embrace change if what they have is a very comfortable situation. And that's often what I see when I talk. I spend a lot of time talking to banks and institutional investors, both here and in North America. And that's generally what I see. It has changed, though. It has changed. I mean, the fact that we even have ETFs is something that 5 years ago we would have thought impossible so fast. But and not to mention the fact that we have President of the United States as an investor, and a big part of his cabinet are investors in crypto assets. So it has changed, but the level of skepticism at the institutional higher levels is still there.
I agree. And I think that also ties very closely with what we're seeing with the lack of what I would say regulatory or legislative clarity. There's an element of there needs to be a steel man against, let's call it the fundamental use cases of this technology and the various assets that fall under it. But then there's also an element within the institutional realm of, compliance tends to lead the way in a lot of like sort of thinking in most of the really large financial institutions. That's sort of a red line, a hot button issue for most things that they do. And so if the regulatory or sort of the legislative component isn't clear, there's even more friction, so to speak, into going into that particular asset class or technology. So Noelle, you're obviously the author of Crypto is Macro Now, which is, for the audience who doesn't know, a newsletter that really blends, global macro analysis with sort of digital asset insights. Do you want to tell the audience a little bit more about, what you're trying to achieve with that newsletter and sort of what the particular topics that you take, the most interest in and that, again, the audience you're trying to reach?
The audience I'm trying to reach, I'll start with that last part first, if that's okay, is anyone who's interested in how the macroeconomic and geopolitical changes are coming together to impact how we live our daily lives going forward. It's about change, but that's a very easy thing to say, and it sounds a bit hand-wavy. You work in the change industry yourself, so you understand how much gets thrown under that label. What I'm particularly interested in is, as I mentioned earlier, not just the development of the crypto ecosystem, obviously influenced by macro forces and regulatory forces and liquidity forces as well, but also how crypto is impacting the macro ecosystem. And this is happening through market structure. As I mentioned before, I'm a markets nerd, and the idea of tokenization of assets we haven't even thought about putting on marketplaces before, that is very exciting. It enables a better distribution of savings and flowing of funds to opportunities to enable more entrepreneurship. That's a whole different bucket. But also, what I'm especially focusing on these days is the geopolitical shifts that macroeconomic inequalities have necessitated. And, rather than get into a political discussion of whether Trump is a cause or a symptom, the fact is the geopolitical balance is changing. And crypto, I'll use the term broadly here, crypto is a new tool in the box. Our society has gone through civilizational changes before, and they've always been somewhat disruptive, often violent, and there's generally a lot of pain and discomfort in the process. But what we have now, Alex, is a tool in the box that not only gives more leeway, more maneuverability to nation states that don't necessarily want to be part of an empire, it also gives more resilience to individuals who, through things that they have said, fall victim to the increasing repression that always comes along with rapid change.
And one of the things you've said in a recent newsletter, you really talk about traditional US safe havens behaving erratically, gold, treasuries even. Is this, in your opinion, more of a structural breakdown? Or are we just watching temporary dislocations based on, some of the things going on in sort of the change in the US administration and what that means for like global markets, right? Whether it's tariffs and what have you. But do you see this as more of a structural thing or something that is more temporary in nature?
Structural for sure. Breakdown, no, not a total breakdown, but signs of a structural shift. We went through this with the pandemic, which wasn't that long ago, but we saw this in the pandemic. We saw, for instance, the global safe haven, which is the US Treasuries, go totally haywire, the MOVE index going through the roof, and liquidity having to be pumped into the market just so that the treasuries could settle. We saw this in 2019 as well through structural issues. What we're seeing now, though, is totally man-made. The pandemic obviously wasn't, and everyone panicked because we'd not seen anything like that in recent memory. This is man-made. This is almost engineered, if you will. We know that the strategy is to, one, increase trade frictions, which obviously is going to reduce liquidity in the market and put a big dent in global GDP. It's a massive tax hike for the entire world. So obviously that was going to cause some volatility in markets, and the authors of the plan know that. But now we're also looking at a plan to weaken the value of the US dollar relative to other currencies, because one of the complaints has been that it has been overvalued because of its reserve currency status. Now, obviously, we want it to stay the reserve, and President Trump wants it to remain the reserve currency. And let's face it, we all do, because it is a very convenient reserve currency. The world benefits from having a liquid reserve currency through which to conduct trade. But things are changing. Again, this is inevitable. There are inequalities within the American society that do need to be addressed. And I think it is a very brave administration to grasp that challenge by the horns. I personally think it's being handled very badly, but I do think that someone needed to try it. And at least they are trying to do so. I don't think it's going well at all. And time will tell whether it's successful, but it is important that something was done. The deficit was becoming an existential issue, and no administration so far since Clinton had actually tried to do anything about that. So I got a bit off track there. So getting back onto the track, this is a big shift in perception of safety. We've seen the world's collateral throw wobbling. We've seen the world's reserve currency head down when in theory it should have been heading up. And we've seen a colossal reduction of earnings estimates for the world's largest stock market. And so what's ahead? We don't know. Everyone is still trying to win this war through the old rules. In other words, any liquidity crunch, call the Fed. They'll pump liquidity into the market, despite the fact that the Fed has to worry about inflation and they're not going to make the same mistake twice, one hopes. There are more variables in the air now that arguably than there were even during the COVID panic, simply because this is a strategy that is being engineered with an idea of what the consequences will be, but that idea is based, in my opinion, on a fairly narrow view of others' priorities. That was a long answer.
No, it was a fabulous answer, though, and I think as a maybe a tangential question to this, when you talk about the U.S. dollar as the reserve currency, and the sort of plan here, or structurally moving to a place where we're weakening the U.S. dollar, at least the current administration, in terms of how they're pursuing their, sort of both trade and macroeconomic policy. How do you think about that relative to stablecoins? And the reason I ask that is, we obviously, when we look at the market for stablecoins, it's predominantly US dollar stablecoin, in terms of the backing. But there's obviously other types of stablecoins that are out there that are backed by other currencies, but everybody really focuses on the US dollar denominated stable coins. And so I'm just curious how you see that as an interplay. And I thought I saw a really interesting stat some months ago that I think stablecoin issuers are one of the top, I think, 13 or so buyers of US treasuries. And so they're a pretty significant buyer in the treasury market. And I think most people expect that to continue to grow in some way, shape, or form, and them to move up the list. So I'm just curious how you see all of that sort of interacting relative to US dollar sort of strength or weakness, and whether it matters or not.
Oh, it matters hugely, and it's so cool that you brought that up. And how I see it is sometimes like in a bowl of spaghetti. There are so many strands and they're all tangled. Stable coins, I wasn't using about that actually over the weekend, strangely enough, because Besant himself has said that he sees stable coins as a way to extend dollar influence in the world. But at the same time, they want dollar influence to be walked back a bit so that it's not quite so overvalued, to boost US exports and reshore manufacturing. And I was wondering, how are they going to reconcile this? And to be honest, I don't know. I don't really see them as two compatible strategies. What I do think we're going to see is an increasing use of stable coins, but not necessarily around the world, because already they're very much used around the world. A lot of emerging economies and developing economies, a lot of individuals living in those jurisdictions save in stable coins, not Bitcoin as much as USDT, for instance, because they understand USDT and it's easy to get in and out of them, more so than Bitcoin. USDT is faster than Bitcoin. So where could this go going forward? I think this is going to end up being part of the geopolitical realignment that Besant and team will be negotiating, part of a security umbrella, perhaps. I'm talking to you from Europe. I live in Spain. And when President Trump started talking about stablecoins, and when Congress started working hard on getting the stablecoin bills through, Europe panicked. Europe had been panicking about dollar influence for some time anyway, but the stablecoin talk really sent them into a frenzy, and they are accelerating, the European Central Bank is accelerating development of a CBDC precisely to combat the influence of digital dollars. Now, this is more geopolitical than practical, because digital dollars are certainly more convenient than digital euros, which are 0.001% of stable coins in circulation. But no, we don't want dollars, we want euros. And so they're going to try and do a campaign to get digital euros. Now, that's just Europe. I imagine, Japan may want to do something similar. They don't necessarily want dollar influence permeating throughout its financial system, especially when the security relationship with the US is slightly more tenuous than it has been in the past. Imagine India wanting also to protect its currency sovereignty and limit the amount of dollar stablecoins that come in. But now, on the other hand, you do have a lot of foreign holders of US treasuries that are reducing their holdings. One, because they're not certain that the dollar won't continue to go down. Therefore, that makes these less of a reliable investment. They're also not certain that the United States won't weaponize US treasuries in some way. One of the suggestions in Moran's paper, which Stephen Moran, who's now the head of the Council of Economic Advisors, he wrote a paper back in November, which formed the basis for the current strategy. It departed from what he wrote, but the basis did include that, if the world does not reduce its demand for dollars and allow the dollar to gradually depreciate, then maybe the Treasury could try things like withholding some of the interest on Treasury bonds only for foreign holders. And you can just imagine the turmoil in the market that would entail. So, in other words, all of this points to a weakening of trust in US Treasuries as the world's safe asset. And if you have foreign holders selling Treasuries, well, that would mean yields go up, and you don't want that because that is not good for, well, pretty much anybody. Certainly not good for the stock market, certainly not good for borrowers, not good at all for the economy. So who's going to step in and buy the treasuries that the foreigners are selling? Well, hopefully stablecoin issuers.
No, absolutely. And a fabulous answer. Going back to, the safe haven conversation, how do you see Bitcoin fitting into that framework? Meaning, do you see Bitcoin as, fitting into a safe haven narrative? Do you feel we're still in this place where, the zeitgeist would say that it's still highly correlated to the NASDAQ and much more of a risk asset, more so than a safe haven? So how do you see Bitcoin? Because it's obviously the asset that you've studied the longest, right? It was really your gateway asset in this space. And you've probably seen the narrative in a way and in different lights over that time period. So how do you see it today and in this sort of lens of safe haven versus risk asset? Or is it just something completely different?
I love that question so much because you've hit the nail on the head when it comes to Bitcoin's complexity. And I get laughed at often when over the years people ask me, what is Bitcoin? And I will say that it is what you want it to be, which actually sounds ridiculous. But when you think about it, if you want Bitcoin to be a risk asset and it behaves like one, if you want it to be a risk asset, very sensitive to liquidity, well, then it is a risk asset, very sensitive to liquidity for your portfolio. But if you want Bitcoin to be a longer-term safe haven, it is that also. It entirely depends on your time frame and your portfolio priorities. Bitcoin is actually both things. And I often get in debates with people, okay, but what is it now? So, well, it is still both things, but there's always going to be one flavor influencing its behavior because price in a market, as you know, is always dictated by the last sale. And usually the last sale is executed by someone with a more short-term time frame, which is why it tends to behave like risk assets, even when fundamentals would tell you it shouldn't. When will Bitcoin decouple? I'm not sure it ever will totally decouple because there always will be people who see it as a risk asset. Therefore, it always will have some of those characteristics. But given its volatility, which I don't think is going away anytime soon, it's a feature, not a bug. Given its volatility, the swings will be trending up with time. Havens are always longer-term concepts. Nobody wants an inflation haven for Friday. They want an inflation haven for the next 3 or 4 years.
So I'm going to quote something I saw from you and get your sort of take on the context and elaborate on it. You said, it's not so much that markets these days are the canary in the coal mine. It's more that they're the doorbell ringing because the movers are here. Yeah, I thought it was a really great quote and thought-provoking in a lot of ways, but maybe talk to the audience about sort of what you meant with that quote and how to contextualize it.
Thank you so much for singling that out. I obviously was feeling very reflexive that day on what we are seeing on our screens. And like I'm sure many of your listeners, it's just fascinating watching things move in unexpected directions. And that's the point that I was trying to make. This isn't about a reaction to lower earnings estimates, because right now everyone knows estimates are with a capital E, and nobody knows what kind of environment we're going to be looking at 2 months from now, let alone 3 years from now. So basically, why even bother, right? You got to publish something, so you have to have some sort of estimates. It's not about what normally moves prices anymore. It's entirely about headlines. And that is different. Yes, we saw that during COVID as well. But again, that was reaction. We were all reacting to a global catastrophe. Now we're trying to figure out what a certain individual is going to be posting on social media at any given time. And we know that when one thing is said on a Sunday, by Monday, it's generally something else. So how does one trade that? And that really is what I was focusing on and hinting at in saying that trading is now all about vibes. And when are vibes most important? When deep change is underway. There really are no fundamentals at the moment to cling to. So we are looking for a deeper understanding of what is happening. And that ties into why the role of crypto, not just in portfolios, but also in the zeitgeist, in the philosophical understanding of what underpins society, its role is changing. When things are changing so fast, when you know old systems no longer work, that does open a window for new systems and new ideas. And we are seeing people who just a few years ago would have laughed at the idea of a central bank holding Bitcoin actually seriously consider that gold may need a digital partner in its role in central bank portfolios at a time when the other traditional safe haven asset isn't quite so trustworthy anymore.
So I wanted to move on to crypto market structure and sort of institutional behavior. But before I go there, at CoinDesk, you wore many hats, as you sort of mentioned, head of research. You also, hosted a podcast. You were editorial producer. What did being at the center of the leading Web3 media outlet teach you about how narratives are built in crypto?
That's a fascinating question. I hadn't actually really thought about that before, but the answer that pops into my head is that things move fast. Media is a fascinating field to work in, and I would arguably say that it was the most fun professional experience working for others I've ever had. It was dramatic, it was important, great people who cared about the mission, which was explaining this new concept to a broader world. The growth was astonishing. Our first event, I wasn't there at the time, but the first event we put on, which was in 2015, I think, had something like 100 plus people. And then by the time I joined, the first event had something like 30,000 people. So the growth really was astonishing. The high level of interest from bankers who saw what was coming. They were definitely the rarity, but there were suits in the audience, even in the very early days. And the acceptance that institutions were going to be a feature. I remember getting into arguments with the editor-in-chief at the time about how we don't need institutions. And I was brought in to focus on the institutional viewpoint because I was the only one at the time on the team who had experience with them, who spoke the language. So my view, yes, Bitcoin was created to go around institutions, and sure, crypto doesn't necessarily need it, except mainstream will join crypto via institutions. Mainstream tends to prefer to invest through their, traditional familiar names, and institutional interest lends crypto a type of protection. If banks are looking at crypto, it's less likely that they will be banned. This was years ago, and that conversation has definitely moved on since then. But no, even at CoinDesk in the early days, there were some of my colleagues did think the United States would try to ban it. I was one of the ones saying they can't because we've got BNY Mellon looking at building custody services. We've got State Street looking at this. They can't ban it. But even back then, there was very much the fear that this is just so iconoclastic that there's no way this can ever become truly institutional. And I think, well, that has been proved wrong. It has become truly institutional now, but it is also still a dissident technology, and Bitcoin is what you want it to be.
The question I was going to ask as a follow-up is, are there any elements to you when you just look historically at different types of narratives and which ones stick and which ones don't, especially over sort of a longer time series? I was always taught in fundraising, in sort of the private markets or venture capital, you want to tell a story that people recognize, but is fundamentally different, right? Because if you're so different from anything that anybody's ever seen before, that's scary for a lot of people, right? And so my take on this would be, if I look at Bitcoin as like a narrative, right? And as a story, it's really mirrored this digital gold sort of storyline. That narrative is sort of stuck and it's sort of maintained. It's, maybe fallen out of favor, a little bit here or there, but like it's mostly been accepted in some way, shape or form by some different corners of the industry. So As it relates to what you've seen, are there certain elements of narratives for either particular assets or for the crypto space in general that you just think are sticky, and for what reason?
I think you've identified one of the stickiest, which is digital gold, but it's not the only sticky one. And again, when I say Bitcoin is what you want it to be, it reflects that it appeals to different aspects of any individual's particular concerns. I fell in love with the concept because of the individual empowerment it offered. Where I grew up, individuals, very few were granted the right to have a bank account. And even if they were granted one, often they didn't want one because the costs were too high. I was struck by the idea that you didn't need to have accreditation in order to be able to transact digitally. And that is still what I very much care about. I have been privileged and I've grown up in a really comfortable family, and I now live in Europe, which is this very stable financial system. But I always have, a compassion for all of those who don't, because I know people who've been through that. So that's what resonates with me. Again, someone like you who has managed portfolios for a very long time, you understand that gold is an important feature in any kind of allocation that looks longer term. And this is the digital equivalent. This is especially relevant given that the younger generation that grew up with iPhones are now becoming young adults. They are coming into money and they're going to be more digital than their analog parents. And Bitcoin does have many advantages over gold. So there's that narrative going for it. Bitcoin replacing gold in the new portfolios that we see coming up, and perhaps even in the old portfolios. I don't know if you saw the report the other day that Germany is trying to figure out how to repatriate the gold it has stored in New York. Well, obviously with Bitcoin, that's not so much an issue. So that's another one. But another one so you have the dissident technology, which is an extreme version of anyone who can't access the traditional banking system with the ease that many of us in the Western world can. That you have the digital gold narrative. You also have, and this is the one that I care about a lot also, the new technology narrative. This is somewhat underlooked, but it is, you invest in new technologies all the time. This is something that I care a lot about. I'm not a professional investor, but Bitcoin is a new technology. It's a risk asset. Yes, it's digital gold. Yes, it's digital. Yeah, it's also a new technology. And we don't know, we as human beings are really bad at knowing what new technologies are going to be used for. So anyone who tells you today that Bitcoin has no use, it's a new technology. The market will figure it out. And that's especially exciting. The market here will figure it out because there's no one figurehead to dictate the marketing or the packaging or the messaging. As much as Larry Fink would like the world to think it's digital gold, the market will decide. And what's more, Alex, it is for the first time a new technology that anyone in the world can participate in. Often with venture funds, new technologies do seek outside money, but you have to be wealthy to be able to access that kind of opportunity. Whereas with Bitcoin, there are no barriers. Anyone who cares about new technologies can bet on this network growing.
No, absolutely. The market being the ultimate arbiter over the long term. So you told me in Spain that you're often most comfortable like at your desk researching, and you're probably someone who's spent the most time globally, I would think, looking at crypto market data specifically and interpreting it. I'm curious what you think the broader crypto ecosystem, or just frankly, the public in general, gets wrong looking at crypto market data. So this could be anything from volatility, liquidity, cross-asset correlation. But I'm just curious what you see as like a researcher and a real student of the market data to say that like, this is the thing that gets misinterpreted the most, and it like drives me crazy.
And that is such a smart question. And you might well end up regretting asking me about crypto data because I get really excited about this. It is very misunderstood. And I'll take a step back and say it's also changed a lot. I used to spend a lot of time staring at things like average purchase price over such and such a time frame and marveling at the fact that we know, because Bitcoin is an open, transparent network, we know who, without names, we know that such and such an address bought Bitcoin on such and such a day at such and such a price. And with that, we can group them into short-term holders, long-term holders. We know at what price those different cohorts bought, and we can detect behavior. And I was thinking, just imagine if traditional investors were able to do this with their Apple stock, for instance. Just the extra behavioral data we would be able to get from that kind of transparency would blow their minds. Then along came the ETFs. And now it doesn't actually make a lot of, I don't even look at the on-chain data for holdings anymore. But my recent bugbear, if you like to call it that, is when people will point at Bitcoin's number of transactions per day and say, it's going down, it's failed. Sure, the average number of transactions a day is not exactly exciting at the moment. But again, the market structure has changed. And a lot of that is in the ETFs. And that doesn't mean that Bitcoin isn't being used. It entirely comes down to what you mean by used. I think Bitcoin should also be part of transactions. And we do have layer twos now emerging that make that easier and faster. And we haven't even begun to scratch the surface of the smart contracts that are being built around the Bitcoin network. Obviously not on, because the code is immutable and simple, but around it, there is a lot going on. However, the Bitcoin use question is interesting when people say, yes, but no one's going to use it for anything. I would argue that even if you just hold it in your portfolio, that is a use, right? Just like gold is used as a portfolio store of value, so is Bitcoin used for portfolio value. And that they'll then take a sidestep here. And one of the many things I love about this industry, and this is very nerdy of me, but it does force us to question our understanding of pretty simple terms and words.
Fabulous. So, Noelle, I'm also curious. We touched on a little bit some of the regulatory things at the front of the conversation, but are there one or two things that you would advise the audience to sort of look out for as it relates to the regulatory environment in crypto? We obviously had, a big change from an administration standpoint in the US, which has, really signaled what I would say is a move towards market structure, stablecoin bill, all these sort of things in the US sort of legislative calendar. But then you also have the announcement of, this Bitcoin strategic reserve, by, the various folks within the administration. So what are you sort of watching, and maybe just sort of handicapping like what things to pay attention to and what things are sort of like, that's a great announcement, but like tangibly not sure how much that's going to impact the space over the next, let's call it, 6 to 12 months.
I'll start with the what do I ignore? I ignore all of the proclamations about Bitcoin strategic reserves. It's just not going to happen. It's a lot of marketing noise, in my opinion. The fact that we have a stockpile, which is protected, I think that is awesome. And I'm not an American taxpayer, but if I were, I wouldn't really want to see my tax dollars going towards accumulating an asset that I personally care a lot about and am very optimistic on, but understand that not everyone shares that. And yes, they will talk about it's revenue neutral. Well, nothing's totally revenue neutral. So that's something I'm not paying any attention to because I just don't see it happening. But everything else is definitely worth paying attention to. For instance, the stablecoin bills, that's the low-hanging fruit. There's bipartisan agreement that we do need some structure around issuance of stablecoins. And while stablecoins, you may think, ho-hum, not very exciting, they are, after all, stable. The liquidity unlock with the stable coins is going to have a high impact in crypto markets themselves, but not just crypto markets, also the markets of digital assets more broadly. And with that, I'm thinking tokenized assets. And with that, I'm thinking new types of markets springing up, as I was saying at the very beginning. That is a very big deal, especially also in terms of operational efficiency. I mean, we already know of US corporates that are using stable coins just for internal transfers. They're not even telling anyone they're doing this. It's just a more efficient way to transfer money. But then the real big thing, the headline one, will be FIT 21 or whatever the equivalent ends up being, where asset classes are defined. And there's a framework for innovation around decentralized applications. That's when we're going to start to see some real innovation in decentralized lending and decentralized exchanges. That's when we're going to start to see banks offer these decentralized services to their clients, lowering costs while offering a smoother experience. And what do they need? They need the stable coins to facilitate the liquidity there. And when you start to see collaborations that we haven't yet seen, a bank and an airline, for example, launching tradable loyalty points. So, and I'm making this up as I go along, but that's the innovation that I'm excited for. And it's been on hold in the United States, the world's capital of financial innovation, for the past 4 and a bit years. So it'll be very exciting to see the gates open and the stagnation has come out and blossom in the new type of sunshine. That's a bit corny, I know, but that does feel like what's going to be happening.
And I'm just curious from your own experience, your confidence level that the legislators in, concert maybe with some influence from, the crypto industry are going to get most of it right. And maybe they don't need to. Maybe that's part of the answer to the question, which is they don't need to necessarily get it like even 75% right. Just the fact that there's a marker down to then react to as it relates to market structure. So how do you feel about that in general? Do you feel sort of highly confident that just starting from a place and getting to the right place will be enough? Or do you view it as like, for these types of new asset classes that really do need some, pretty clear lines that they need to get most of it right? And that potentially is risky or not?
I'm very optimistic. I'm more optimistic than I've ever been, actually, largely because David Sachs does know about innovation. He does know about crypto. And even just looking around the room at the first White House crypto summit, the right people are at the table. So I'm confident they will end up getting most of it right. Nothing is ever 100% right, but basically all the crypto industry is asking for is give us frameworks about what is legal and what is illegal, and then let us innovate. And there will be mistakes and addendums, and people will be punished, and et cetera, et cetera. But, take the training wheels off the bicycle and then put the Band-Aids on when needed, when the kid falls off. But basically just let innovators innovate. And with that, capital will repatriate, capital that innovators that had left in order to be able to build something in more friendly jurisdictions will go back, because the United States, for whatever issues you may think it has, it does have the world's largest financial market, and it does have generally a very pro-financial innovation culture.
Couldn't agree more. So, Noelle, we asked all of our guests this closing question, which is our high stakes hot take. What is your boldest prediction for the macro crypto or Web3 space for, let's call it, the rest of this year, 2025?
The boldest, I don't even know how bold it is because I've been writing about it for so long. And that is a surprising geopolitical fragmentation, which will lead to competing currency systems. I'm not suggesting crypto will be part of that. I don't think it will. But crypto will be an alternative that will fill in the cracks while these two systems, I say two systems, I think there'll be two systems, while these two systems settle down.
Very awesome. So we'll have to leave it there. But Noelle Acheson, thank you for joining me on High Stakes. We look forward to having you back again soon. And thanks again for joining. Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nwaka, signing off.